Hi, Iris.
Hello, how are you, Anna?
I'm doing fine. Happy Monday.
Happy Monday to you.
It's the end of January almost. One more
January
day.
30th, that is the end of the month, and we're here. Okay, so we're a little bit late, everybody. I mean, if you're there, you were waiting for us earlier. You know how it goes. I was in showings. Anna's been waiting for me, but we're here. So today in After Hours Real Estate, we're gonna be talking about frequently asked questions. Okay, one of them is the investments on fourplexes, and the other one is self-employed, right?
Yes.
Self-employed. Okay, so if you have any specific questions for us, we're here live, every Monday. So let us know if you want us to talk about or ask us a question, whatever it is, right? And we're here. Okay, so we have the expert in lending, which is Ana Cabrales with Cabrales Mortgage, and I'm a broker, real estate broker for 11 years. So anything that you need to know, let me know. Okay, so this is Iris. So Anita, one of the questions that I just had recently was with a client. This is gonna be his first investment property. Okay, he's about to get married, but as you know, the new generation on buyers now, they're very savvy, right? So they're careful and they actually do the research what and where they're gonna be investing their money. So this specific client, they're very young. I'm very proud of them. They're about to get married and they're gonna move from Austin. They're gonna move into the RGV area. So he's not ready to buy a house yet. So basically, what he's telling me is, I want to buy a fourplex where I can live in one of those apartments, and then for the other three to pay my rent, which is wonderful. And
Yes.
we get that question all of the time, right? I mean, how do I do this? This and that. So that's what we want to talk about that specific case. So, Anita, what would you recommend to a client that it is their first house? Okay, they're about to get married, but they don't want to buy a house yet. They want to do the investment first, then they want to buy a house, because this is what this buyer told me, right? He said, I'm going to do it after I'm going to buy my house. But for right now, I want to live in an apartment. So, what would be the advice that you give to our clients, our friends that are listening to the show today?
So the advantage of doing it that way, of buying first the fourplex and then the house, is that the down payment will be less. You will buy the fourplex with an FHA loan with a 3.5% down payment. You live in the fourplex at least a year, maybe longer, and then you buy your home with a 5% down payment. That's going to be the advantage of doing it that way. Um, there's a rule that if that fourplexes have and the multi-unit properties have, and a lot of buyers are not aware of that rule. It's called a self-sufficiency rule. What that rule says is an FHA imposed rule that says that the rents of three of the units have to be equal to or greater than the mortgage payment. So if last year, the year before, the interest rates were great, a lot of fourplexes were passing that rule. Right now, with the higher interest rates, a lot of times three of the rents don't pay the mortgage. So even though the customer is qualified, the property itself is not self-sufficient. So it's something that the customer needs to know. When you're looking at properties, we're gonna have to look at what are they selling it for, how much do the seller want, and what are the market rents. And it's not like they're being rented by that particular seller. Is what are the entire area being rented, their market rents. It's going to be based on an appraisal of the rents.
Okay.
So that's an important rule to know. It's not impossible, but we just need to do a little bit more work. Now, let's say that we're borderline. Let's say three of the units barely pay the mortgage, or they're a little bit lower. One of the things that we can do is buy down the rate. When you get a lower interest rate, um, the monthly payment is lower, so then it passes the self sufficiency rule. So that's a lot of customers ask me, can I give a $5,000 more of a down payment, or what if the seller lowers the price by 5,000? Those changes really don't affect the payment.
Mm.
but buying the interest rate lower will help you in like a lot more. So maybe if you get seller credit or seller concessions, use that money instead of using it to pay closing costs, use it to buy down the rate so you
Oh,
can pass the self-sufficiency test.
okay. So
But
then,
it's a great investment and it's a great way to start a portfolio if you're looking to buy a fourplex. Yes.
okay. So then the new rule, that one it's barely coming up this year. Once the in no, it's always been there. And what is
It's
the
always been there, but it's never been an issue
uh-huh.
because the fourplexes before they were selling cheaper
Mhm.
and the interest rates were great, so all fourplexes would pass. Now the fourplexes, the new ones, cost a lot more money and the interest rates are higher, so now it's becoming an issue. But that's the rule that's always been there. I've been doing this 12 years. It's always been there.
Okay, so it's called a self-sufficient rule.
Self-sufficiency rule, yes, where it says three of the rents need to pay the mortgage payment. Or actually, it doesn't say three of the rents. It says 75% of the rents need to pay the mortgage payment. In case one rents for 1,200 and the other one for 14, then you add them all four and take 75%.
Okay, so 75% of rent should what, Anna?
Should be equal to
Uh-huh.
or greater than the mortgage payment. So let's say that the mortgage payment is 3,600. Then that means all of them need to rent for at least $1,200 because three of them, 1,200 times three will be 3,600. So
Okay. Okay.
that's kind of a thing that a lot of customers don't know the self sufficiency. So uh, sometimes it's hard to tell them you qualify, but the one you wanted doesn't. Yeah.
Yes. Okay. So then one of the options, if you're listening out there, you have specific questions about this topic, let us know. We're here live. So let's say you are the one who wants to buy a fourplex and you want to live in one, and this is your first time, or you're a first time buyer, your first property. I mean, the advantage is that you will qualify with a 3.5% down payment. Okay, but now we know about the self-sufficiency rule, which is in effect now due to the interest rate. So then the option, okay, to get that property qualified, I mean, let's say the client qualifies for another property, I mean, will be to get some kind of, let's say, seller concession, seller credit, where you can buy the rate down, correct?
Yes, you use the credit to buy down the rate. Or if you have the cash yourself, then you can use your money to buy down the rate.
Okay, so then let's say, I mean, just for our friends to have an idea. So the property is 398,000. Okay, $400,000, and the rents are $900. Okay, so how much money should I ask the seller? Okay, as a let's say a credit in order for this property to qualify.
So typically, let's say 1%. So let's say that the loan. Let's talk about the loan. Let's say that the loan is 300,000.
Mhm.
Then 1% is $3,000. So maybe you going in. You can ask for anything because we can use $500. We can use 1,000. We can use 2,000.
Anita, just wait a little bit, because my son can't come in. Let me open the door.
Okay.
Delito, ven.
He's probably hungry.
No, hombre, se fue. He couldn't open. Probably he just went through the garage. Okay, so sorry, guys. Okay, so then it will be 1%.
1% it will buy you a good amount of discount, but in reality it can be any amount because the table sometimes it says $500, sometimes 1,400, sometimes 2,000. I mean, you can go as high as you want, but anything that you get will help you.
Okay, so what we're seeing right now, I mean, as a FYI for our clients, I mean, our friends who are listening to After Hours Real Estate, usually what I've been seeing normally, I mean, of course, all properties vary, but normally a seller is right now negotiating, I mean, between five to $7,000. I mean, let's say new construction. Okay. Now, all properties are different. It all depends. What if it is a resale property, etc., right? Or whatever the situation is with the seller. But I mean, that's what we're seeing. So then let's say this client, I mean, gets 5 to 7,000, right? As a credit concession, seller credit. Will that be a good enough for this client to qualify the property?
Yes, that will be good money. And let's say that you have more than enough. you
Mm-hmm.
can always use the excess to pay closing costs.
Ah, okay. So then you
So
have,
you don't lose the money. We
okay.
can, if we don't need it to buy down points, we'll use it for something else.
Okay, so you have the options. Okay,
Yes.
that's great. Okay, that is
But any questions, anybody that is looking to buy a fourplex, they have questions, just reach back to Iris or myself, and we'll be able to guide you.
yes, because remember, all of the situations and all of the properties are different. I
Mhm.
mean, right now we're talking about a specific case, right, for a specific client,
Correct.
but not necessarily means that it's going to be for you. So then
Mhm.
remember, you have to talk to an expert. I mean, if you are planning, to either buy a house, or buy a investment property. Okay, so please let us know if you have any questions. Okay, so the next frequently asked question that we've had recently, right, in this market is this,
Self-employed.
right? I mean, I have my own business. So, okay, what advice would you give to our friends that want to buy a property, but they are self employed?
First, I'll tell you that love self-employed buyers.
Mm-hmm.
I A lot of loan officers don't even do self-employed borrowers because it's a lot of math, and especially if they have multiple businesses, it can be a
Yeah,
lot of work. But
yeah.
I love it because it's very black and white. We look at tax returns, see what's reported, and we can calculate income like quickly. We can make a decision right away. So I love self-employed borrowers. The main thing with self-employed is that you have to have your business open for at least 2 years. Business must be open for 2 years. We're gonna need to see tax returns for the last 2 years. So we go by the profit in your income tax. So you usually have your gross income, then you have your expenses, and at the end you have your profit. That's what we're gonna go by. So make sure that your business is, after you take all your expenses, is doing good with profit. If the business has been open over 5 years, we only need one tax return. So that's a good thing also. A lot of times, bless you, a lot
Thank
of times the first 4 years are tough for a business. Maybe they don't make a lot of money because they're barely starting. So then the fifth year, they report more income, and then maybe they qualify for more. So that's another
so.
good thing. The
So
longer your business has been established, sometimes the better, right? Because you have more,
if they have been open for 5 years, you're only going to be needing one income tax,
one tax return. Uh-huh.
one tax return. Okay.
And then I was gonna say something else. Oh, let's say we also have borrowers, self-employed borrowers that don't report a lot of profit. They make 500,000, but then they write off 500,000. So then at the end of the day, their profit is very little. Um, we have a bank statement loan only, where instead of using the tax returns, we look at the bank statements for either 12 or 24 months, depending on the loan, and we look at the deposits of the business. Let's
Mm,
say that the business is depositing 30,000, 30,000, 30,000. We add them all for 12 months, and then we take a percentage, and then that's the income we use. So we don't go by the tax return, we go by the bank statement. So that's another option sometimes that self-employed borrowers will have.
okay, so then they have options. So then, if you have had the situation where you don't qualify because you're self-employed, as long as you have had your business for 2 years and you've done your income tax for 2 years, I mean, Anna can review your information and probably let you know maybe you do qualify, right?
Mhm.
I mean,
Yeah,
you do have an option.
yeah.
And I really like the option that if your business has been open for 5 years, you only need one income tax. I mean, that is an advantage, right? I mean,
That is
that
an advantage. Less documentation to show, faster review. Maybe last year you didn't do so good, but this year you're doing really good. So then all we need is 1 year. So then that can make a difference.
that can make a big difference. Okay,
Yes.
so then how about our friends? I mean, what can we basically give them an advice to try to report a little more, right? That way they can qualify, because then we run into these situations where the last 2 years, I mean, the reports are being low, and now they don't qualify. Now they have to wait until what, the following year, or to revise the income, right, tax, in order to qualify. So what advice would you give them, right? I mean,
So right now it's perfect timing. A lot of them are barely preparing their tax returns. we can basically sit down with them and say, okay, how did the year look? What are you thinking you're going to report? Do you already have a profit and loss that we can review? And we can go over it. If you have depreciation, if you have any, usually it's vehicles or machinery or big items that you can depreciate, buildings can be depreciated. The IRS takes that as an expense, but we as lenders, we know that it's not an actual expense, it's like a write-off. So we give you the money back. So
Mm.
the more depreciation you can put, the better. All that is we give you back as credit. So let's say that you only reported $20,000 of profit, but you reported 100,000 of depreciation. The IRS is only gonna tax you on the 20,000 because that's your gross income, your taxable income. But we're gonna give you credit for the 20 plus the 100. So we're gonna say your income is 120. So
Mm.
depreciation is your friend. The more that you report on depreciation, the more we're gonna give it back to you. So
Okay.
that I guess talk to your CPA, your accountant, ask them. Okay, I'm trying to buy a house this year. What can we depreciate to help me out?
Okay, so usually, to do that, the expert on that will be your accountant, whoever that is doing your taxes. Just
Mhm.
mention, I'm trying to buy a property, and what can we depreciate for my business? That
Mhm.
way, I can get those credits back from the lender.
Correct. Yes.
Be like that, the key.
Mhm.
I
Mhm.
mean,
And a lot of times the customers don't know what to ask.
no.
So don't be afraid. We're a team.
Mhm.
Tell the loan officer, tell your CPA, can you talk to my loan officer? They can explain you what they need.
Yeah.
And then we'll say, okay, send me the tax return. Let me look at it. And then we'll ask, do you have a profit and loss for this year? Do you have a depreciation for this year? Are any of these expenses that you wrote off things that are not likely to happen again? Maybe they bought a big printer for it's a printing job, a printing business, and let's say they only buy a printer once every 10 years.
Mm-hmm.
Then if we have proof that that was a one-time expense and it's not going to happen, maybe we don't have to take it as an expense. So it's like when you do self-employed, you really have to think about what's going into the tax return. So I
Mm-hmm.
guess that's why I like it. And I'm not afraid to call a CPA or an accountant and say, can you explain why this is on tax return, or tell me more about it? So it's a team. So just keep the lines of communication open, and hopefully we can find a solution.
That sounds great. Well, thank you so much. Like always, Anita, for give us all of these golden nuggets to our friends that are. If you're not here watching the show right now, I know you're gonna see it later. But do remember to watch it. I mean, there's plenty of golden nuggets to help you realize your dream, either as an investment this year or to buy your home. Now, remember, if you're self-employed, we can make it happen. If you want to buy your first investment property, okay, we can also make it happen. So let us know if you have any specific questions. We're here every Monday, and you can find us on social media. So thank you so much for being with us. Anna, thank you for your time.
Thank
Anna
you.
Cabrales with Cabrales Mortgage, and I'm Iris Heredia with Momentum Realty. So we'll see you soon next Monday. And thank you for being here, Anna. Really appreciate
Thank you, Iris, for the invitation.
you.
Thank you.
Bye.
Take care. Bye bye.